Hello dear traders, I'm Maria Starodop and this is the review of crypto analytics from fx.co. It's the 7th of September, today Thursday, and now today's review we will discuss the following. Both cryptocurrencies of Bitcoin and Ethereum are in the grip of the downward trend, and today we will observe short-term targets and trading tips for both of them. And we have only one article by Artem Petrenko. So, the cryptocurrency market capitalization has stabilized near the $1 trillion mark. However, daily trading volumes have barely reached $24 billion, preventing significant price movements in major cryptocurrencies. Considering the absence of significant macroeconomic local news, let's examine the current positions of market leaders to determine potential short-term targets. It's worth noting that despite significant institutional investor interest, Ethereum continues to maintain a high level of correlation with Bitcoin. Given this, any movement of the flagship cryptocurrency, any movement in the leading altcoin Ethereum will be linked to the Bitcoin situation and consequently to macroeconomic factors. Despite low trading activity in the crypto market, investors continue to actively accumulate Bitcoin and Ethereum, and on-chain resources show a trend of accumulation of Bitcoin by all major categories of investors, including whales. A similar situation is observed with Ethereum, indicating a high level of trust in the leading altcoin and its fundamental value. However, due to the downtrend, the percentage of Ethereum holders with unrealized losses has reached 44%, up from the initial 27% in early July. Despite this, as the price of Ethereum decreases, demand increases, in part due to deflationary nature of the asset following the merge upgrade. So let's start with technical analysis. So we will start with Bitcoin. As of yesterday, it was trading at around 25,700 level, with daily trading volumes around $10.7 billion, accounting for slightly less than half of the cryptocurrency market trading activity. The asset continues its downward movement and gradually approaches the 25,500 level, which is the key support zone at this stage of the price movement. Additionally, there is a significant reduction in volatility in Bitcoin and the overall crypto market, and consequently, we are witnessing minimal price movements in the Bitcoin, and the absence of significant fundamental factors only exaggerate this. As a result, the Bitcoin market is becoming increasingly manipulative. As of mid-August, for a 5% price movement, a market maker needs only 460 Bitcoin. So market is very, very much manipulative now. And if we look at the chart, when determining potential targets for Bitcoin, it's essential to understand that setting a stop loss should be above the potential impulse during increased volatility. On the 4-hour chart, there is a gradual narrowing of the price movement corridor, which may lead to an impulsive breakout beyond the range. The triangle is always a figure of uncertainty. So the price make an impulsive, either make an impulsive rise to 26,000 level or test the support at 25,000 level. Fundamentally, Bitcoin remains in a downtrend, as indicated by the MACD indicator, as well as stochastic and RSI, which are near the level of 20, typical of seller dominance. Major trading activities for Bitcoin can be expected next week when CPI data will be published. labeled market data can also provoke a local surge in activity, but there will be no significant changes in the price movement structure of Bitcoin. Okay, let's have a look at the chart of Bitcoin for the moment, and then we will get to Ethereum. So, Bitcoin opened today, the 7th of September, at 25,763. And now it is trading at 25,768. So the situation hasn't much changed since yesterday. It's still on the same level. We see the low volatility, the narrow price range. So we should be attentive to any impulsive movements of the price. And now let's get back to the article and talk about Ethereum. The first thing to remember when determining potential price movements of Ethereum is to first analyze Bitcoin. This asset will dictate the overall direction of the market. Over the past few days, Ethereum's dominance level has dropped to 19.21%, while Bitcoin's influence has only increased. If we look at the chart, we can see that as of yesterday, it was trading at near the level of 1,628 with a daily, very low daily trading volumes. The price movement structure differs slightly from Bitcoin, but sellers still dominate, as indicated by the MACD indicator. Among the nearest bear targets, the psychological level of 1,600, and it would open the way to 1,550 for sellers. On the 4-hour time frame, we also observe a reduced trading activity and gradual narrowing of the price range. This means that, like Bitcoin, the price can shoot in either direction. As already noted, when breaking below 1,600, it will be a key level. If, on the contrary, the price makes an upward impulse, the 1,660, 80 levels will become a key area of interest for buyers. Okay, let's go look at the chart of Ethereum for the moment and then make a conclusion. So Ethereum opened today at the point 1,631, and now it's trading at 1,635. Well, similar to Bitcoin, the volatility is very low. The price is still on the same level like it was yesterday. And also we should be quite attentive to any impulsive price movements that can occur anytime. And making a conclusion, Artem says that it's likely that the formation of triangles from Bitcoin and Ethereum will occur roughly at the same time. The key difference will be in the potential price movement and target levels. Volatility on both assets is gradually reaching a minimum, increasing the risk of impulsive price movements. Overall, these price movements won't have a deterring impact, as investors may want to wait until inflation data on September 13th. Okay, this is all for today. We'll see each other tomorrow in our next review. As usual, I wish you profitable trading. Have a nice day. Don't forget to write your questions and comments down below, and see you next time. Goodbye.